So here we are. It's another Monday morning and it's 8:30. And so here I am live again. And hopefully there's not the sound issues I had last week. So if anyone was present then, apologies for that. It was something I couldn't quite sort out at the time, but I should have sorted it now. So hopefully no repeats today. So what are we doing today? Well, pretty much the same we do every Monday morning. We kick off the week with a look at property finance and what's happening in the property world. So, and as always, I welcome your questions. So pop those questions into the chat box down there, and then I'll pick them up and we'll work through them one to one. Aim to be here for about half an hour till about 9 o'clock. But of course, if there's more questions, then I'll just hang about a bit and answer them. So there we are. And thanks for Darius for coming straight on there with the question. Excuse me. It's not that sort of cough, by the way. Not that sort of cough, by the way. I'm perfectly healthy. Quick glug of water. Okay. Yep, going to do that. Great. Got any more questions? Keep firing them in, Darius. I'll come to them in a minute. So, yeah, so welcome along. We're going to spend a few minutes chatting about property finance and any aspect of it. And the more creative side of things, really, that's what we're looking at, to be more creative. And it's about doing more with less. So how can you do more with property, but using up less cash? That's really what my videos, my training, our brokerage is all about. It's about doing more with less. So welcome along. Got a question? Don't waste it. Pop it in the box and I'll be happy to deal with it. Have we seen anything new happening in property this week? Well, you know, we're seeing the gradual thawing of mortgage lenders predominantly just starting to come back and ease themselves back into the market. Not all. It's still, if you've watched this in previous weeks, you'd have heard me talk about the fragmented approach to the COVID lockdown. And all parties in a property transaction have taken differing views on how they're going to react to it. Lenders typically scaled everything back as soon as lockdown happened and just said, well, you know, some said let's not lend, but some said let's lend much more cautiously. And that's the thing. Now, almost week by week, as they've been able to get a handle on what's happening, then they've gradually relaxed some of those things. And we saw some lenders coming back to doing 75% loan to value last week. So it's a gradual easing, and it's no more than that. And probably that's what we would expect. Okay, so Darius is straight in here this morning, and thanks for that, Darius. So let's look at some of those questions. So you want to know how bridging works. Can you get one for BRR? Okay, so one of the major uses of bridging finance, Darius, is to do buy, refurb, refinance. And I've been teaching that for pretty much a decade or more. In fact, unless you've got a big pile of cash and you can buy a property to cash, or someone else's cash, of course, bridging finance is the only legitimate way to fund BRR, buy, refurb, refinance. So absolutely, you should be using that. You certainly shouldn't be using a mortgage because no mortgage lender is going to knowingly give you a mortgage when your clear intention is to redeem that mortgage and refinance within a matter of months. And, you know, there's a lot of mortgage fraud going on, some deliberately, some innocently, where people think that you know, you can just get a property on a mortgage and then redeem it a few months later and get a mortgage when you refinance. No, you can't. Well, you can, but you're going to have to lie through your teeth to a lender on on what you intend to do. So, you know, I would say don't listen to anyone that tells you that that's the right way to do it. It isn't. Cash or bridging is the way to finance the purchase of a property if you're going to do a buy, refurb, refinance. So how does the bridge work? Well, it works in different ways, Darius. I would suggest that you, to get a better understanding of how bridging works, get yourself over to my YouTube page. It's just Kevin Wright Property. As soon as you're on YouTube, just type Kevin Wright Property in the search bar and that'll come up for you. And look at a particular video called The 5 Types of Bridging, and that will give you a really good understanding of how bridging works at a superficial level at least. And then you'll find some other videos on there that'll give you a greater learning as well. So next question from Darius is, how soon after can you refinance and what will be the rates? Okay, so this is a very common question. Now, I deal with this most weeks in either a Facebook group or a comment on my YouTube channel. If you want a full range of lenders, or as full a range of lenders as is appropriate to your personal circumstances, then you need to wait 6 months. Own the property 6 months, and then you can apply for a remortgage. Now, can you apply sooner? Yes, you can. But the issue is that you won't have access to as full a range of lenders. And the lenders that will do it on one of three categories. They'll either say, we only lend against the purchase price. Secondly, we only lend against the purchase price plus what you've spent on it. And thirdly is we'll lend against open market value. So those are the three ways to do it. Rates, it's difficult to be specific on rates because we don't know your circumstances, and the rates vary because not everyone qualifies for the best rates. So, you know, it could be, you know, as little as 2 to 3%, but it might not, because you might not qualify for those things. So there we are. So strategies to buy with less money and recycle it. Can you briefly mention a few strategies? Well, again, just I do all of that. There's probably about 50 videos all around that on my YouTube channel. Some of you are watching on YouTube, some of you are watching through Facebook. So Darius, just get yourself over to that YouTube channel, and I appreciate your interest. But you're going to get a lot of information on there. Okay, so another question from Darius, and good to see him coming in there. We'll just keep rattling on. So question from Darius is, how soon can I get a bridge if you're buying at auction? Well, if you're buying at auction, in most auctions, proper auctions, you get 28 days to complete. So what you need is a bridging loan that you can get within 28 days. Now, the reality is that bridging is used extensively to buy auction properties. So bridgers are perfectly geared up to complete a transaction within 28 days. So how soon can you get it? Within 28 days. Now, part of that how soon is going to be dependent on you for two reasons. One is how quickly you respond to requests for information and documentation. And secondly, how good is the solicitor that you choose? Now, because solicitors can drag things out, and a number of solicitors, residential conveyance solicitors in particular, are not used to working at auction speeds. They're not used to tying up a property purchase within 28 days. So you need to select your solicitor carefully. So to give you a recent example, a couple of months ago, auction purchased, and we did the whole thing start to finish 11 days. Didn't need 28 days, 11 days was enough. Why was that? Because the borrower was really on the ball with providing information and documentation, and they picked a really good solicitor that was on the ball. So there we are. So we got vacant property lettings. Good to see you back. And hopefully you're getting a better sound than you got last week. So let's have, we've got a couple of questions here from you. So thank you for those. I want a further one further down. So let's look at that. Okay, so first one from Mr. Bacon is if 3-bedroom terrace is sold for 100k on a street, would an unmortgageable 3-bedroom terrace on the street be valued any different? Absolutely, it would. If the going rate for a nicely conditioned property on a street is 100,000, if there was a property that didn't meet that criteria, in other words, it's got something wrong with it. Now, depending what it could be, it might just be it's in really poor condition. But if it's got if it needs work doing to it, then absolutely, yes, that's gonna devalue the property. And the worse that's wrong with it, the more devalued it would get. So, for example, if it's got some structural defects, that could have a massive effect on downvaluing the property, possibly by anything up to about 50%. The condition of a property very much influences its value. Okay, so there we are. That's one. Second question: do bridging loans have a different lending criteria for limited company? No, not at all. Bridges couldn't really care less whether you're applying in your personal name or a limited company name. They're all about the property. Bridging is asset-based lending, so it's about the property. It's not about the borrower in any way like mortgages is about the borrower. Borrower for a mortgage, the borrower is central to the lending proposition. With bridging, the borrower is peripheral. The property is central. Okay. Zeev says, have loan to values gone back to normal? Definitely not. They haven't. And not sure they will. I think we saw this in a decade ago in the credit crunch, and the aftermath of that. Lending never went back to what it was before the credit crunch. Now, I have to say that lending is in a much better place than it was before the credit crunch. Mortgage lending is essentially a risk mitigation exercise. So mortgage lenders are always looking at anything that could increase the risk of lending on a property, and they're going to be looking to mitigate that risk as far as possible. And we saw as soon as the lockdown happened, all the peripheral products, not the mainstream vanilla products, but the sort of peripheral stuff like lending against commercial properties that had restaurants or pubs, lending on serviced accommodation properties that couldn't have guests staying. Those products just went bang, and they just went. And because valuers couldn't come out and value, the loan to values went down, typically to between 50 and 65%. Now that has started to thaw out a bit, but are you going to see the extremes of loan to values that you saw before coronavirus? No, well, not for a while anyway. So lenders are going to get really comfortable with how the market is performing when post lockdown, before they start going back to everything as it was pre COVID. And a phrase that we're hearing a lot now, not just in property but wider, is there's going to be a new normal. So what was normal before isn't going to be normal now. So as says it said something to Darius here. Recommend attending one of Kevin's workshops or training programs he goes through using bridging creatively in great depth. Yep. Well, Ash, you know that very well because you've been through my full training program, and you're now working with me in a more closer relationship. Yeah, Darius, there's a good starting point is my property finance masterclass, which in this period where we can't do venue-based events is a live stream event that runs on the first Saturday of every month. It runs from 10 till 3 with breaks every hour, and it's available for the princely sum of £24.91 plus VAT. Now, where might you go to get that? I'm going to pop that in the comments here. Let's pop that in there. So that should be popping up there. There we are. Okay. So Darius or anyone else that wants to attend a property finance masterclass, first Saturday of the month, 10 till 3, and it's rycmasterclass.co.uk. Go and grab yourself a place, and it'll be good to see you there. Okay. So Saeed, for a cross collateral bridge, what's the value they go to? For instance, if your property is currently valued at under 200,000, at 200,000, and currently under development. Oh, okay. Yeah, that's a good question. Okay, so a collateral bridge, if you're not sure what a cross collateral bridge is, get over to my YouTube channel, look up that video, the 5 types of bridging, and it explains exactly what a cross collateral bridge, because it's one of the 5 types of bridging loan. So, but essentially, to quickly summarize that, it's using a property that you already own to fund a property that you want to buy, either partly or wholly. Okay, so bridging lenders, to answer your specific question on the value, bridging lenders will always lend on the current value when they go and look at a property. So if it's under development and it's worth 200,000 at that point in time, that's what it gets valued at. You might be able to make it worth 300,000, but at that point in time, the done up value only exists in your head. It's not factual, so it's discounted. So there we are. Good. Thanks for that question. Good to see you, Saeed. A question from Ryan. If a bridging lender was to lend on an asking price and you bought at a discount, could he lend? Could you then do serviced interest on the loan? Excuse me, still not that cough. If you looked at another of my videos on YouTube, you'll see that you'll find the 3 ways that interest is serviced on a bridging loan: retained, serviced, and rolled up. So possibly you could, if you could service interest if you so wanted to, but the defining factor on that, Ryan, is not whether you bought the property below the asking price. It's whether you have sufficient residual income reoccurring on a monthly basis in your bank account, and you would be asked to supply bank statements. So that's really the critical factor in being able to service it, a bridging loan, as you go each month. Good. And thanks for your question. So we are vacant property lends back in. When selling a property to pay back the bridger, will I have to pay capital gains tax? No, you won't. Again, this is a very common misconception, is that you pay capital gains tax. Now, let me say right here that I am not a qualified accountant, so I cannot give you answers on tax, but I can tell you what qualified accountants have told me on this. This is very simple, and this comes up fairly regularly, and people have a People have, I'm just looking at another question from Darius. Still question not answered about something bridge. Okay. Darius, I can't read emojis. So if you want to ask the question, just type it out properly. Don't use emojis. And then I'll answer your question because I can't read what you're saying, quite simply. Okay, so going back to capital gains tax. Okay, so here's my understanding. Again, please, it's not advice because I'm not a qualified accountant. So capital gains tax is triggered by the disposal of an asset that you own, that you've held for the medium to long term. Now, HMRC aren't exactly clear on when the medium to long term is, but they are clear on when short term is. And if you buy and sell a commodity certainly within 12 months, HMRC's view on that is you are trading. So it's a tax on profit or a tax on income, not a tax on assets. So capital gains is an asset tax. Income tax if you make a profit in your personal name, or corporation tax if you make a profit in your company name, is what you pay when you trade. Now, what you trade doesn't matter whether you trade in cars, furniture, baked beans, or property. If you're trading, you pay tax on the profit, and it's either income tax or capital, or income tax or corporation tax. It is not capital gains tax. And accountants tell me that's why. Okay, so Darren says, are you a broker or do you just provide property training? Both, actually, Darren. I'm a partner in a property finance brokerage, and I've got 20 plus years experience as a broker. And since 2013, I've been providing property finance training. You said property training. I would clarify that it's property finance training. There are plenty of other companies that do property training, but I specifically do property finance training. That's not 100% of the curriculum, but it's a good proportion of it. So there we are. So Matthew, thanks for your question. How much upfront cost is there when using bridging? Good question. And as is often the case with bridging, the answer is it depends. So you've come through YouTube. So have a look at the two videos I'll direct you to. One is the 5 types of bridging. So that gives you an understanding of how bridging loans are typically structured, the purposes. And then the other video, Matthew, is how to shrink your deposit. And that's by using a market value bridge. But typically, bridges lend 75%. Now, it could be 75% of the purchase price, 75% of the asking price, 75% of the value, 75% of the done-up value. So it's usually 75%, but what differs is 75% of what. So those videos are going to help you in those sort of things. So Zeev said, so what do you recommend the purchase strategy should be as the loads of values are low at the moment? Purchase on cash and refinance once it's gone back to normal. There is no strategy that you should be adopting to the exclusion of every other strategy, Z, because everyone's going to be coming from a different position. Now, if you're able to purchase cash and hang on to a property and you don't need to recycle that cash, yeah, that's great. And yeah, do that, and you know, have your cash tied up in there for, I don't know, 6 to 12 months, whenever you judge, or whenever your broker helps you to judge, when the market is or when lending criteria has become more stabilized. I think that's the question, and it's as good as it's going to get. But a lot of people, that's not going to be an option, A, because they haven't got the ability to buy cash. They haven't got that much cash. and B, they don't want to let it sit around for months on end. They want to turn it round. So yeah, so you can, but you know, everyone's different. Vacant property letting says wow. Well, I'm glad wow was your response. Thank you. So Darius says, okay, so 100% bridge without you putting any cash down. Yeah, basically, Darius, they don't exist. No bridger is going to lend 100% of a property and let you put nothing in. Why would they do that? They take all the risks, you take none. So a bridger is going to want to see some of your skin in the game. Now, your skin in the game can take different forms. So if you put up a property that you own already, then as like a cross collateral bridge, we're back to that again, then yeah, that's your skin in the game. If you put down cash, that's your skin in the game. If you put down someone else's cash, that's your skin in the game. If you are buying below the asking price and on a market value bridge, that's your skin in the game. So yeah, there we are. So let's just make sure we haven't missed anything there. Karen, thanks for your comment. Didn't realize no CGT on a flip. Yep, most people don't. And I regularly have to answer that question in exactly the same way. As I said, I'm not an accountant, don't pretend to be one, and don't offer tax advice. But more than one accountant has explained that to me in the capital gains tax. You have to own a property for more than you would if you were going to do a flip for it to be subject to capital gains tax. If you owned a property, excuse me, for 3 or 5 years, and then you sold it, yes, capital gains tax would be the tax that you would be subject to. But you're not going to flip a property over 3 to 5 years, are you? So there we are. So great, keep the questions coming. Coming up to 9 o'clock, but I'm happy to roll over a bit if you are. Oh yeah, so Vacant has said, oh, so that was what your wow was about. The wow was about capital gains tax. Yeah, frequently investors have got an incorrect understanding of capital gains tax. So I'm always happy to enlighten you on that. Okay, so we got Saeed. Okay, so another question. So thanks for that, Saeed. What's the best way to purchase a guest house? Are they currently under commercial? Is it better to purchase them with a bridge loan and apply for an HMO license and get an HMO mortgage? What would be the best method for this acquisition? What could you recommend? Okay, so now you'll be pleased to know, Saeed, that I have done a video on exactly how this works. So get yourself over to my YouTube channel, get on YouTube, type in Kevin Wright Property, and just look for the video about guest houses. So there we are. How good is that? I've got a video ready made for your answer. Okay, but are they currently commercial? Yes, they are. Is it better to purchase with the bridging loan? For most guest houses, you've got no option because most guest houses, the profit on them means that it's impossible to get a commercial mortgage on them. So buying with cash or bridging is your only realistic option. The video explains why that is. Now, you can't just take a guest house and run it as an HMO, Saeed. You have to get permission from the council to change the use. It's more complex than getting and just buying it and applying for an HMO license. You wouldn't get an HMO license if you haven't got permission to run it as an HMO, because its commercial usage is as a guest house, and that's different to an HMO. So best method for the acquisition, cash or finance, because those are the only options you have in the vast majority of cases. Okay. So there we are. So again, pop yourself over to the YouTube channel, you get a much more in-depth. And Saeed, if you got your eyes on a guest house, then I'd love to help you to facilitate that purchase and work with you on that. Okay. So Carlo, hi, good to see you, Carlo. Okay, in this current situation, is bridging as easy to get as it was before COVID? Honest answer to that is no, it's not. Is it possible to get? Absolutely it is. But is it quite as easy? And have you got so many options? And can you do everything that you could do with bridging before COVID? No. Some of the, again, just like I was saying about mortgages, some of the, peripheral stuff has been pulled back and curtailed for the moment. Doesn't mean to say that it's not going to come back. But if you've got a good deal, we're still getting those through, Carlo. So if you have got a good deal, we know each other. So, get in touch. So there we are. And hello to another old pal of mine, Rob. Good to see you, Rob. There we are. Excellent. So down to the last question now. Elliot's just popped in with a question, squeezed in at the last last minute there. So, by the way, if you're liking this, I see I've got 6 likes already. If you're liking this, then ping a like in there, because then that's going to help me. And if you're getting some benefit from this little session, then it'd be great if you could do some likes in there. Yeah, seen another one come in there. So yeah, great. So let's have some more likes on that, please. Thank you very much. Where are we? Elliot. Following on from Carlo's question, what is the minimum loan to value from bridging given in the current climate? Now, I'm not quite, you might need to refine that question there, because the minimum loan to value, well, if you want a 10% loan to value, a bridge is going to give it to you. So, there is no minimum loan to value. There's a minimum capital sum. So there's a minimum loan, and bridges have different minimums on how much they'll lend, the size of the loan. But so you might want to refine that question, because I'm guessing that that's not quite what you meant. So feel free to, Elliot, pop that in there and ask that question. You have. So what's the maximum loan to value? Now that makes more sense. So what's the maximum loan to value? Okay. So maximum loan to value is 75%. And you won't get 75% on every deal, but that is the maximum you can possibly get. Now, if you've been watching earlier, you'll see 75% of what? Well, it could depend on the type of bridge. It could be 75% of purchase price, 75% of asking price, 75% of done up value. So there are different 75%. And if you didn't hear that, see or hear earlier, Elliot, then pop over to my YouTube channel and watch the video, The 5 Types of Bridging. It's Kevin Wright Property once you're on YouTube. So there we are. So hope that helps. So Bacon Property Link is back with another one. What is the most amount I can borrow from a bridging company? The most amount, it goes back to 75%. So the most amount is determined by what deal you're looking at, how much it's got, and how much cash or equity you've got to put down. And it's simple, but if you've got £1 million property and you've got 250 grand in cash, then you could probably get a £750,000 bridging loan. So it's all around. The bridging loans have been done for millions. But it's only because the people that have got the required deposit in cash or equity to make that work. So there is no maximum. Bridgers would impose a maximum. Each bridger has a maximum. So you might find that a bridger says, well, we don't want to be doing loans more than £2 million, or something like that. Okay. So Elliot, great. Good, you got your answer. So David says, you just come on here, so you've missed most of it. No problem. Watch the recording. It's on my Kevin Wright Property Finance Expert page. And guys, if you haven't found and liked that yet, so do me a favor, go and like that and follow Kevin Wright Property Finance Expert, because I post quite a bit of stuff on there you might find useful. If you're finding this useful, you'll find Kevin Wright Property Finance Expert Facebook page useful too. So go on there, follow it, like it, and then you'll see all the stuff that I put out. So there we are. Shania, good morning. Nice to see you here. Good to see some old familiar faces. Some of the people that I've trained in the past and still work with. So yeah, it's Bank Holiday Monday. Yeah, I know it is, but I thought, should I give myself Monday off? No. I mean, I've created a bit of a thing here Monday morning, and hey, I've got the rest of the day to myself. I'm not going to be on here all day, am I? So where we are, a couple of questions here. Jordan, good to see you, Jordan. Can you still get 80% loan to value limited company buy to let mortgages spent over on a buy, the BRRRR, buy, refurb, refinance and rent? Yeah. They got not, as I said, I don't know if you was watching earlier, Jordan, but anything on the extremities of the borrowing front got kicked out as soon as the lockdown hit, and 80 and 85% buy-to-let mortgages were one of the casualties. So, and now to answer your question, well, it's changing almost on a daily basis because lenders are thinking up policy on the hoof here. So all lenders, bridging lenders, mortgage lenders, if you've watched these before, you'd have heard me say, no business, large, small, or anywhere in between, has said, right, guys, let's go to our business plan and see what our contingency planning was for a total shutdown of the economy. No one's planned for this. So they're all frantically formulating policy as they go and working out what they need to do. And that means it's a constantly evolving situation. So 80% loan to value mortgages went. And I guess it's fair to say they would come back. But you're not, even if they're available now, and we haven't checked over the last few days, my business partners in the brokerage do that. But you're going to have better chance to get one or more choice on getting one in a few months' time. So there. So David says, what is the average percentage bridges charge? I'm guessing, excuse me, I'm guessing you're talking about interest rate, monthly interest rate, David. Well, there isn't an average as such because bridging underwriting is bespoke and it's based on perceived risk, and bridges will perceive each risk differently. Now, pre-lockdown, we were looking at, I guess if you said there's not an average, but are there parameters with which bridging loans normally sit? Yes, there are. And we would say most of them would sit between 0.75 and 1% a month. Now, can you get them cheaper? Yes, they are in certain circumstances, if the perceived risk is that much lower. And does it ever go higher? Yes, occasionally, than 1% if the perceived risk is that much higher. So there we are. Shania's going to see 2 short lease flats today in the same house. Keep you posted. Yeah, please do. Okay, so those that have trained with me know that short lease flats are a tremendous opportunity. They're complex, and the complexity of buying a short lease flat that you can't get a mortgage on, it puts off most of the competition, so you're never going to be busted with competition if you're going after a short lease flat. But once you understand the strategy and how to run it, there's a good margin in them. And part of my full training, the Ninja Investor Program, which you can see a sort of banner for at the back there, the Ninja Investor Program, we deal with that in detail. And also I've got links to the specialist solicitors and valuers that you need to work with if you're going to do a short lease. So Jordan, you've only just joined. No problem, Jordan. Just it'll be you're on YouTube. It'll be on my YouTube channel. So just go and watch from the start when we're done. Vacant property lens. I love this live chat every Monday. I'm glad you do. Tell others about it, please. And let's grow this. Okay. Shania said they need to do your training. Well, of course, I would actually agree, wouldn't I? Shania, you should know you've done it, but yeah, they should do my training. Yeah. I think it's fair to say that there is no other training like this currently being run in the UK. That is just a fact. There are a lot of property trainers, and a lot of them do good training, but there's nothing specifically and uniformly training on property finance, creative property finance. And so the Ninja Investor Program is the standard bearer for that. Damien says, I thought bridging was expensive. Yeah, everyone does. And when everyone says that, my answer is, compared to what exactly? So, you could say, well, a Ferrari is expensive compared to a Mini. True, it is, but it's not the same car, is it? A Ferrari is, it goes from A to B. Yep, it'll go there a lot faster. You got to compare like with like. So, the problem with most people have with bridging is they focus on the cost, where the more intelligent investor, and certainly the ones that I've trained, focus on the opportunity. If bridging is going to cost you 10 grand, but you make a 50 grand profit, do you really mind that bridging's costing you 10 grand? People I train say no. So Ash says buying short leases and unmortgaged properties are a fantastic strategy. I absolutely agree, Ash, and you train with me. I use that phrase, observe the masses and do the opposite. So in this case, observe the masses of property investors and do the opposite, and the masses of property investors avoid unmortgageable properties like the plague, and so therefore there is an opportunity there. Shania says it's great training. Thank you. So Vasco, there we are. Hi. Says, can you explain a little bit about the BRRRR strategy, buy, refurb, rent, refinance and rent, converting 2-bed into a 3-bed or 4-bed or 3-bed into a 4-bed? What is the process? How do you know you can convert the place? Do you hire an architect or take the builder with you? Okay. So essentially, creating an extra bedroom, doesn't matter whether it's 1 into 2, 2 into 3, 3 into 4 or whatever, is you're essentially reconfiguring internal walls to divide up a larger room into 2 smaller rooms. You don't need to hire an architect from that, but you need to know how to do it. Most of the cases in creating a stud wall, but there's different ways to do it. If you don't know anything about it, Vasco, then yeah, you should take a builder with you, because otherwise you won't know what you're doing. But so there's no planning involved. So fairly simple to do. Plenty of people do it. If you're doing a flat, it gets a little bit more
complex in so far as that you should get the freeholder's permission. One of my mentees that I'm working with at the moment, they're just doing that process, creating a 2-bedroom flat from a 1-bedroom flat, minimal cost really, and they applied for the freeholder's permission, and it was granted with a small charge, so that's good. Shania says, get an LLP, get your Ferrari tax free. Now you're into tax advice, Shania, and I don't delve into that, so I'm going to pass over that. Noran, hi, good to see you. Another of my trainees here. Number of news articles are saying the property market may drop 30% plus. I haven't seen articles that say that. I've seen, the Bank of England saying, predicting 16% at worst, not predicting 16%, predicting 16% at worst. Savills predicting 5 to 10%. Haven't seen anything 30%. So how do you work out a purchase value in this environment and what our values doing? Okay. It's too early to see what values are doing. My guys in the brokerage are going to get a better idea once we start getting values out there and see what they're valuing properties at. We're going to get a feel for that. So it's too early to see what values are doing. How would you work out a purchase value? Well, you're going to have to factor in, Noran, what you think is a likely drop. Now, you might not factor in 30%, but you might want to factor in, let's say, 10 or 15%. So there we are. Vasco, good. And I'm focused on my first BRRRR project, but I'm scared to take a bridging loan, to be honest. I'd rather go buy to let and wait 2 years. Sure. Okay, nothing wrong with that. Vasco, most people are scared to take bridging loans out. In fact, the people that aren't scared to do it are people that have done my training, because I've removed the fear factor. Fear is just the fear of the unknown, really. When you don't know how something works, you'd be scared. Of course you're scared. Yeah, that's perfectly natural. But an acronym of fear is false expectations appearing real. So when you learn about something, and there's no better place to learn about bridging than doing my training, is that there's nothing to be scared about at bridging. But that's your choice. And if you just want to go really safe, then yeah, get it on a buy-to-let mortgage, wait 2 years and then refinance. Nothing wrong with that at all. So Shania's giving Vasco a bit of guidance there. Find a BRRRR that allows you to pull out all of your money out. That way, on a down value, you still make a profit. Yeah, it's about finding, it's about finding the right properties, Vasco. And if you're looking at the properties that everyone else is going to buy, looking for, then you're going to find it more difficult to do that. So it's, I teach you to invest counterintuitively. Which is again observing the masses doing the opposite. Okay, so looks like we're about there. So thanks for all the guys that have stuck with me today. Good to see you. Pop a like in there on my on this video. If you haven't already, pop over to Kevin Wright, Property Finance Expert on Facebook, and like and follow it on there. And I'll be back again next Monday. Sahid's come back. So during this, he's nipped over there and saw on the video. Good. How do you recycle the cash from the guest house? Okay. Once you bought it cash or bridging, you build. I thought it was covered on there, but I'll say it quickly on there. You build up the business. Make it as profitable as you possibly can for a minimum of 12 months, and then go on a commercial mortgage. That's how you do it. So there we are. So enjoy your bank holiday. I certainly plan to. And thanks for your participation. And see you again here next Monday morning.
Have a fantastic week.